Intraday traders. The U.S. stock market rose last week while the US dollar index fell. The S&P 500 ended the week 1.3% higher and the US dollar index rose 0.9% for the week. U.S. stocks edged higher on Monday, led by gains in technology and material stocks. The dollar edged higher after remarks by European Central Bank policymakers that any shift to tightening from current ultra-loose policy will not be soon. S&P 500 closed marginally lower on Tuesday after Senate Majority Leader Mitch McConnell announced Senate is delaying its summer recess until the third week of August. Fed Governor Laine Brainard, voting member of Federal Open Market Committee, said she wanted more economic data to decide whether another rate hike was needed. The dollar weakened 0.3%. U.S. markets ended higher on Wednesday, supported by dovish testimony of Fed Chair Ylon. Ylon said the federal funds rate would not have to rise all that much further to get a neutral policy stance, the rate which will neither stimulate the economy to accelerate nor slow it down. Investors interpreted this as a hint that the tightening cycle would be shorter than anticipated. Bank of Canada raised its overnight rate to 0.75% from 0.5% as widely expected. The U.S. stock market continued advancing on Thursday as Fed Chair Ylon reiterated central bank's plans for a gradual increase in interest rates as the factors holding down the neutral policy stance subside. Dallas Fed President Rod Kaplan, an FOMC member, joined Fed Governor Brainard's dovish comments, saying he wanted to see more evidence inflation is moving towards Fed's 2% target rate before committing to another rate hike. The US dollar index was flat. The U.S. stock market closed higher on Friday as weak data made it more likely the Fed may not hike rates anymore this year. The dollar index fell 0.7% after report that retail sales fell 0.2% in June and headline inflation slowed to 1.6% in June from 1.9% in May. The most significant events this week are New Zealand and British inflation reports on Tuesday, Bank of Japan and ECB interest rate decision on Thursday, and Canadian inflation report on Friday. It is widely expected the ECB will signal a reduced need for stimulus. Happy trading and see you next week.